We are just about to learn how to enter in transactions that relate to the revenue or income side, all the stuff relating to the customers. But before we do that, I just want to look at the full process, take a step back and see what's happening from start to finish on what I call the revenue process, so you get it right. And I tell you what, this is the single most common, the biggest, the messiest issue that I come across on a new set of books when I get a new client. It relates to this because it wasn't followed. And what that results in oftentimes is duplicated revenue, which means a higher profit, which is a higher tax bill, right? And then your accounts on your balance sheet are just inflated. Some weird stuff like uncategorized asset or maybe even undeposited funds. We're going to learn about what all these are also, by the way, in the coming videos. So the short of the story is this. Just do your best to get this right now so that, one, most importantly, you can trust your numbers. And two, when it does come time to outsource the bookkeeping to a professional, when you're so busy that you don't have time for it anymore, they're not faced with the mess, which will save you in the kind of the cleanup costs for all that. All right, so what is the revenue process? Okay, so here it is on the screen. We're going to go through a few examples from simpler to more complex, but what the process is, the steps are an invoice, receive payment, and a bank deposit. Okay, those are doing different things behind the scenes on the accounting, and I have that described here, but let's go through all of them slowly so we understand it. All right, so step one is invoice. Okay, an invoice is when you perform services and then you invoice your customer. Okay, right then, that's when the revenue is earned. All right, so there's your revenue. We notice the green numbers down here. Both revenue is increasing and it's being tracked in accounts receivable. So both of those numbers are increasing. Okay, so what's happening next? Then let's say your customer pays you. Okay, you're receiving a payment. Step two over here. They are paying invoice number one in full, $1,000. Okay, so now notice the green and red. What's happening here? So our accounts receivable decreases because we have the payment. We're not tracking that anymore. And another bucket, another account called undeposited funds increases by $1,000. Okay, you have the check. This is the funds. It's just not deposited yet. It's in this weird limbo state, which is actually very useful as we get to the more complicated matters, and we'll explain that there. Okay, so finally, you do take that payment to the bank, okay, a bank deposit. So now our undeposited funds is reducing because we no longer have it. Instead, it's cash in the bank. So our bank account increases by $1,000. Okay, I hope that makes sense along the way, just those simple steps, but I just want to say again, when this is not followed, it creates a big mess, and then you're looking at numbers you cannot trust. You're making decisions on bad information, which most likely ends up being a bad decision. All right, let's get a little more complicated here. All right, right over here, okay, we got a few more things going on, golly. Okay, so we have a few customers involved with multiple invoices, and ABC has two invoices to themselves. All right, but let's see what's going on here. All right, so total invoice amount, that's the revenue, is $18,000. Okay, so we can see that right down here. Revenue is $18,000 and it's being tracked in accounts receivable. Moving on over to the customer payments, what's happening here? All right, so ABC company is paying for both of their invoices. Okay, so for $3,000, XYZ company is only paying half of their invoice. Okay, so we're going to come back to the remainder there in a moment. Joe Schmoco is paying for all of their invoice. All right, so that totals $15,000. So our accounts receivable is going down by $15,500, and and our undeposited funds is increasing by $15,500. We have those checks that are just not deposited yet. Okay, but let's take a moment here. So undeposited funds, here's that same $15,500, but the remaining balance, remember, XYZ company is only paying for half of their invoice. So the remainder is still sitting here in accounts receivable to be paid later on. All right, so now, step three, let's take those checks and deposit them. So we have the check, the payment from ABC company for $3,000. We have the payment from XYZ for $2,500 and Joe Schmoco for $10,000. Okay, total of $15,000. Undeposited funds is reducing by that $15,500, okay? And then our bank account is increasing by $15,500, okay? Makes sense so far, and here's the balance sheet as it is now. Now the checking account has that $15,500 in it. Accounts receivable still shows $2,500 to be owed, and then undeposited funds is nice and cleared out. It's good to go. Okay, let's look at one more thing when there are merchant services fees included. Okay, and I want to highlight this. Okay, we're going to get over here, and this box right here. Okay, this, the bank deposit, it has to match exactly what shows up in your bank account. Okay, so our job is to make our books match reality. When our bank account shows a line item for a customer payment, let's say, if that number differs from what's on the well, we can't use checks in this time. So they paid online with a credit card. There's a merchant fee taken out. So we need to make sure that that deposit amount matches what we tell QuickBooks, because it's not this full amount anymore. It's got to be something different. So let's see what's going on here. Okay, so same deal. We have the same set of invoices, the same payment. Okay, so $15,500, no change there. But when it comes to the deposit, when we enter the deposit, we have to include something else. Okay, this one right here is new. All right, so let's talk about that a little bit. When we take the payment in, that's not checks anymore. It's paid with credit card. For $15,500 is no longer in undeposited funds. What shows up in our bank account is $15,035. But we have to account for those fees somehow. So we can actually do that on the deposit screen and record the expense right here, so that all the accounts affected are accounted for and the two sides match. So that's all consistent right here. And the same end result, almost the same end result. Checking account has $15,035. There's no more undeposited funds, nice and clean and cleared out. And accounts receivable still has that $2,500 left over from XYZ company. They only paid half their invoice, remember. All right, so there's an example that's a little bit more complicated, right? It's not just the payments going to the bank. We have to manually account for the fees that are being taken out so that we're not left with a weird untouched balance in our undeposited funds, so that we can trust our books. Okay, and that's where the whole point of this is. We want to be able to trust the books so we can make the best decisions that we can. And we got to make sure everything on our books matches reality. And sometimes it takes a manual touch and understanding what's happening behind the scenes to do so. Okay, so remember, we're going to go through each of these and get some practice. And by the way, monitor what's happening behind the scenes, not to be too wonky, but to gain understanding. All right, so that's it for this high-level overview on the revenue process. And it is so important to get right so that you're not having a big mess to be looking at, because you need to trust your numbers. All right, that's it. We'll see you in the next one.